You're live.
Great. Thank you. It's 5 p.m. on December 7th. This is a meeting of the Town of Dewey Beach Investment Committee. We'll start with our opening roll call. Brian Prevor, Chair of the committee. Will the other committee members present introduce themselves?
Barney Krause.
Dennis Trencher.
Suzanne Evans.
Elizabeth Gibbons, liaison from council.
Bill Zolper, Town Manager.
And I think, is that everyone we've got? All right. We appear to have a quorum. We've got 4 members of the committee, 3 present in person. I am remote over Zoom. Let's start with our agenda, which has been posted onto the town's website. Do I have a motion to adopt the agenda?
Motion to adopt. Second it.
All in favor, say aye. Aye.
Aye.
Any noes? None. It passes unanimously. Let's see. Meeting minutes from our last meeting, which was on August the 4th, 2023. Those have also been made available online. Anybody have any comments or changes or edits to the meeting minutes from last meeting?
No.
All right. Shall we move to adopt the minutes? A motion to adopt the minutes from August 4th, 2023.
Motion to adopt.
I second.
All in favor?
Aye.
And it passes unanimously. Let's turn to item 1 on our agenda. Bill, do you mind giving us an update on the town's financial condition?
Sure, thanks. The town's looking okay at this point. There are 3 major revenue streams, and Sheena Hall is here, our financial supervisor, that can also answer your questions. There are 3 streams that the town depends on to make budget. Those are the hotel tax, the accommodations tax, and the transfer tax. All 3 of those are down for this year, given the economy, the current interest rates. The homes aren't moving as much as they have in the past couple years. We may make transfer tax. We're about $90,000 off of that. If we get $90,000 between now and April 1st, we'll make transfer tax. But accommodation and hotel tax, we feel that we're not going to make our numbers on those this year. On the flip side, parking was up by $97,000 this year with parking revenue. Fines are up also this year. Our miscellaneous, which are bonfires, dog permits, things like that, those are all up also. Building permits, if we continue at this rate, we'll be fine on building permits and in business licenses. But our real revenue streams with the accommodations tax and the hotel tax, those are definitely down, and we're probably not going to make budget on those items this year. We will be introducing next Friday at the commissioners meeting. Sheena will be introducing an amendment to our budget. It'll be one of the first times that we've done this. This was on the advice of our auditors. Looking at our annual budget when they do the audit, they said, through the year, if you find your parking is up, and your expenses maybe for police are up, let's adjust the budget, do an amendment to the budget. So we'll be introducing that next Friday. It's new. I'd ask for everybody's patience as we go through this process. But I think we'll have that passed next Friday, hopefully by the commissioners, to try to level the bubbles, I would say, on our budget. Sheena, anything else? Any questions from anybody on the committee?
Thank you, Bill. That's very helpful. What is the shortfall anticipated for the hotel tax?
So Sheena's saying around $50,000.
And is that fully offset then by increases in parking and other miscellaneous?
We are going to try to do that. We also have a couple budget numbers that are a little bit over in a couple different of the departments. Remember, we have a new chief, She came in after the budget was already sent in to Sheena from the previous supervisor of the police department. So we've had to address and adjust some things on that, but we are going to try to balance it out as we go on. Building permits may be the one thing that really helps us out this year to try to level the bubbles a little bit. But as I said, in parking, we're about 97,000 over. That's going to help also.
Got it. Do you anticipate any need to draw down on the reserves that we're holding in our investment accounts?
No, not at this time, but I think if I looked at the numbers correctly for the year, we've only yielded about 1.5 on our investments. I mean, I may have looked at the numbers wrong, but I would hope we're going to do a little better than that in the next coming months.
Yeah, I mean, there are obviously different components to the budget, and we'll talk about that in a moment. I mean, our long term is doing much better than that. Short term, which is mostly cash, is going to do considerably worse, but is short term, so it's not that surprising. Any questions or comments from other members of the committee?
No.
All right, hearing none, then I think we can move on to our next topic. Kate, do we need to elicit public comments on each of these items?
Kate has stepped away. There is nobody showing up and being in the waiting room for public comment, but yes, we should have done a call for public comment before we started the items and then in advance of each item. But there's nobody in the waiting room.
Well, we'll consider that an open ask, and given that there's nobody here to answer.
I realize that you can't see that there's nobody in the
But there
waiting
is
room.
nobody in the waiting room right now.
And there's
Okay.
nobody in the room.
Okay, fair enough. Well, if that changes, please advise.
Sure.
Certainly.
Next item on our agenda is discussion by Dominic DeFebo regarding the portfolio. Dominic had notified us ahead of time that he had a conflict, so he sent over the portfolio report, which I will quickly summarize and do my best impression and channel my inner Dominic. So we have the account summary. It's available on the website. It outlines the holdings in both our short and long-term funds. Short funds have just shy of $1.6 million in them. Long funds are right around $5 million in them. The portfolio overview shows what I would consider a fairly robust quarter given the markets. Year to date, our long-term portfolio is returning 7.1% gross. Net after fees is 6.7%. That's against a blended benchmark of 5.8. So we're beating our benchmark, and that's true year to date as well as quarter to date. There's been a fairly good recovery in the markets as inflation has stabilized. Bond rates seems like they have peaked, perhaps, and money market rates evidently look like they have peaked. But our overall portfolio on the long end, year to date, is showing we're just under the $5 million mark, $4,996,000 approximately. Let's see what else. Looking at cash versus fixed income, I think there have been questions about this in the past. Looks like quarter to date, cash versus fixed income investments are doing better than cash. Quarter to date return 2.6% against 0.8% for cash and equivalents. Which is not that surprising as inflation levels off, the bond market stabilizes, people will move toward duration, which would be in fixed income as opposed to the daily liquids of cash. So the recommendation from Brown is to continue trading up for longer duration. as it seems that interest rates are at least stable. Does not seem that the Fed is inclined to raise rates right now, and perhaps we will see some cuts in the future. If we see those cuts, that could benefit those longer duration fixed income investments. So I would probably agree with Brown that we should be pushing more into longer duration fixed income and away from money markets. The equity portion of the portfolio has done very well, particularly in the large cap equity space, S&P 500s. The S&P is up, it looks like 20.8% year to date. Overall, all the U.S. equities are up over 26% year to date. So that has benefited the portfolio immensely because we have a 7.1% gross return against a 6.7% net. In page 4 of the performance detail, you can see the returns on the individual underlying strategies. The weak link is probably the bond fund, but we are, by design, heavily weighted towards fixed income and bonds. So happy to see that the returns look like they are stabilized. It's been a pretty rough few years in the bond market. You can see trailing 3 years is a negative 4.5%, and right now the quarter to date is up to 2.9%. So that's we're trending in the right direction with the bond portfolio, and we continue to be reasonably well anchored by each of the underlying equity strategies. They've given us a nice boost. The S&P 500, which makes up about 18% of the portfolio, again, year to date is up over 20%, and about 7% for the quarter. Small and mid cap, not doing quite as well, but still in positive territory, and definitely better than where it's been in the last 3 years and the trailing 12 months. Year to date, we're up 4.2%. And the international portfolio is seeing a lot of recovery. That's probably good. The strong dollar is perhaps favoring investments there. Page 5, we've got a summary of cash and the cash equivalents. 5.2% yield on the cash and cash equivalents, although I would honestly probably expect that's going to get depressed going forward from here, which is, again, why Brown is probably edging a little bit more toward longer duration to lock in those rates, lock in the higher yield, higher returns in the bond funds. So that's, I think, a pretty decent snapshot of what's in the portfolio. I'm not sure I can answer questions for Dominic, but if any questions or comments from other members of the committee, air them out.
Actually, because of our dependence on the bonds, which we have to do, I'm surprised we did so well.
I agree with that. Yeah, I think Brown has continued to perform pretty well. I've personally been impressed. I mean, we don't pay very high fees. You can see that in the difference between the gross and the net. I mean, 40 basis points. It's really pretty low for fees, and they're getting us good returns. Other questions or comments?
If the committee is through with questions, could I ask you some questions?
Ask away. Not sure I can answer.
Okay. These are questions that have been asked of me, and I didn't have answers, so I thought I would come here, and maybe then I would better have answers. One of the questions I had was how we work together with Dominic. He is our financial advisor, and he gives us reports. Is he authorized to buy and sell as long as he stays within the parameters that we have set up for the investments? Or does he need to notify, ask? How does that work?
he is required to follow the investing policy guidelines, and that's his investment mandate. And he can move in and out of securities as long as they're within the mandate.
Okay. Okay. So if there are large changes, but within the mandate, that's within our agreement with him.
I'm not sure what you mean by large changes, but within the mandate, he has discretion to make those changes.
Okay. Okay. Because in my personal account, no changes are made unless I approve them. And I just was worried because we hadn't been meeting as regularly, or also that we're only meeting quarterly, that things could, I know we're investing for the long term. I know that. But something could happen that needed action, and I just didn't know who he had to advise, discuss, consent from. But no, he's within the discretion to act independently.
Within the guidelines, yes.
Got it. Got it. Okay.
I mean, for what it's worth, it's a pretty tight set of guidelines. I mean, there's not a lot he can invest in. I think you'll recall maybe 3 quarters ago, we had some discussion about revising and updating the investment guidelines for the town. We talked about potentially opening to more private investments, which created a little bit of a stir.
A little bit.
We reverted to the same portfolio we have, which is it's heavily weighted to fixed income, which is not surprising as a town. But it's a very long-term, or you might even say infinite time horizon for the long-term portfolio. So, you know, there's an argument to be made that it should be more aggressive, but we opted not to.
So, different folks in town that are following our postings have pointed out declines in the general fund and in the beach fund. Does it seem to you that those have now been recovered as the market has stabilized? And actually,
I mean, I'm looking at the portfolio values on page 2. So this is the long-term portfolio. And it I mean, there was a market value since inception. I mean, it's showing an increase. I mean, there have been losses in the past, which is reflective of the markets. I guess I'm not entirely sure I understand what the question is. I mean, portfolios ebb and flow as the markets dictate. We are invested in the markets. We don't invest exclusively in cash. So it has moved up and down, but there has been growth in the portfolio overall.
okay. So those may have been monthly blips rather than any enduring trend.
That's what it looks like to me. I mean, I'm not sure month to month because I don't have that data in front of me. And I think Dominic would be much better equipped to speak to that. But, you know, year to year, it has definitely fluctuated. There have been down years, but if you compare it to your own portfolio, that is probably your experience as well.
Oh, yes, yes.
I mean, it's actually in a fairly tight range, which again is probably reflective of the fact that we invest mostly in short duration, you know, bonds. You know, we don't do a lot of equity investing. It's a small percentage of the portfolio. It's under 20%, I think.
Well, the general fund has both, that is more short-term, which that may have been why I was seeing more variability. Another question that had been asked of me, and I'm throwing it out to the committee for input, should the rainy day fund perhaps be in less risky options? I know that's very vague, but that was the question asked of me. And as I said, I don't have an answer, so I'm bringing it to you.
Yeah, I'm not entirely sure where it's invested. Does that qualify as short or long term? I don't have the breakdown of what our sub accounts are.
Okay. Could we perhaps ask Dominic to give prior month and current month in his next report or something like that, so we can dig in a little bit deeper?
You want a month-to-month report?
Current month and prior month, perhaps. Because I see we have trailing 3 years and trailing 12 months on a lot of them, but I think I'm getting questions from people as they look at it from month to month.
I mean,
That asking too much?
I'm sure we can ask Brown for whatever we want. I mean, no one should be reviewing their portfolio in their right mind on a month-to-month basis and worrying about fluctuations month to month.
I think some folks most, because these are the questions that I'm getting, and as I said, I'm at loss to answer them, which is why I brought them here.
I think,
Yeah. I mean, I don't doubt that there's fluctuation month to month, but I think that's kind of a fool's errand to worry about, did it go down in any one month? Like, you should not be in and out of investments that rapidly. I mean,
Agreed.
these are long-term investments. I mean, we can get whatever data we want, I'm sure. If we tell Dominic to produce a month by month over the trailing year, he can do it.
I guess
I'm not sure it's going to be meaningful.
Well, the thing is, I believe before I was on the board, our investments for the rainy day fund were primarily like bank accounts, CDs, and some people think that's the way to go. We're making no money. So again, what's our long-term goals? That would be really the thing I think we want to have from Brown and tell us. How are we doing against making money long-term? And how sound are the investments they're making?
I think people got very excited with the money market things going really high. Oh, Gary's joined us.
Yeah, could I make a comment if I may?
Please.
The issue came up largely because I think it's about $1.3 million, which is the general fund short term. That's about 60% of our rainy day fund. And our rainy day fund and the balance that we're required to hold in that is driven by our policy, our general fund policy. And so, as the budget goes up, the rainy day fund has to go up as well. What happened was a couple months ago, I think Dominic made the decision to change the fixed income investment, basically taking everything out of what it was then invested in and putting it into a different fund. And it showed a paper loss, which can have an effect again on our rainy day balance. So the question came up is, should we have that $1.3 million, which is in the short-term general fund investment, should that be subject to any market risk at all? Or should it just be in some sort of cash account, which could gain whatever the prevailing interest rate is at the time? That's the basic question, I think.
Thank you, Gary.
And that's what it was before, earlier. That's the way they did it.
I mean, I'll just make the observation. I mean, I wouldn't worry, or I don't think, my personal view is looking at an account month to month is not that informative because markets fluctuate. With yields on money markets, like, sure, they're very attractive today, but ask yourself this exact same question 1 year ago when money markets were paying 0%. So, like, things can change fairly rapidly, and just as quickly as they went up to 5%, they can come back down to 0%. And I think what Brown has done is shifted us from money markets into short duration bonds, which are locking in some of those yields. So whereas a money market fluctuates day by day, it is considered liquid. A bond fund, you're trading away some of that daily liquidity in favor of duration. You're locking yourself up at longer to get those rates held for a longer period of time. So I think from just a portfolio management standpoint, that's the right move, even if it proves wrong in the short term. Like in any given month, that might not have been the best trade. But for the long term, like when you see rates are higher and you think that interest rates are likely, if anything, to go down, which is what I think most professionals are predicting, getting more duration and locking in those rates is probably the right move. But I can't speak for I don't know where the question came from, so I don't know what is the alternative someone is proposing, to just put everything in a money market account?
Yeah, it came in part from me, and I think others may have raised the same question. It's just that rainy day fund, there is a balance that's required. So if we were to get to the end of the year and market conditions maybe have turned down somewhat, I mean, isn't it possible we could have a decline in the balance on that short-term account, which would then make us have to scramble to find other sources of money so that we could then meet the balance that we're required to meet under our general fund balance policy for the rainy day fund. That's the difficult situation. The thought was that we ought to have it. This account should not be subject to any risk at all. That interest rates may go down close to zero, but anything that's positive, adds to the account. We just don't want to get in the situation where the account could lose value.
I mean, if the goal is to lose nothing, then the account should be put in entirely cash, and it will, in most market cycles, will earn nothing. And I'm agnostic. I mean, if that's the town's policy, I mean, it doesn't matter to me. But
Well,
I think that's the trade-off.
Yeah, we're stuck with this. This is 60% of the rainy day fund. So if the value of this 60% goes down, there's a possibility that the value of the rainy day fund goes down as well, which leaves us scrambling to meet the balance that's required under our general fund policy. And we already have other issues to deal with in the budget, and trying to manage the revenue streams that may be showing some shortfall this year. We don't want to have to have an additional scramble to make the balance that we're required to make on the rainy day fund. So that's the problem that then the question has come up.
Okay. Well, we can discuss it with Dominic.
Do you know if year to date, the general fund short is up, down, or neutral? Where would I find that?
That's toward the end of Dominic's report, I believe. Somewhere around page 12, maybe.
I don't have the full printout. I just have the long portion of the portfolio. Somebody else has it full printout.
Yeah, if you look inception to date, you're comparing with the benchmark. The inception to date, the total portfolio is up 0.3%. Trailing 3 years, it's down 0.4%. Trailing 12 months up 4.6%. Year to date's 4.2. Quarter to date's 3.3. So yeah, it's up. But if we get to the end of the year and it turns out something has gone south and over the past 12 months that the balance is down, then again we're maybe scrambling a bit to find other sources of money.
Well, based on that, wouldn't you want everything in cash then? Based on that philosophy.
That's certainly one option. I mean, maybe that's the only option at this point, if we want to guarantee that the balance doesn't go down.
Yeah, I mean, I just pulled it up online. The performance history for the short term shows it's up. Portfolio net year to date is up 3.2%.
Right.
And the wise people right now think, and I think too, interest rates are going to go down.
I mean,
Right.
the Fed has signaled that it's not raising rates.
Yeah, I mean, I don't disagree with any of that. I mean, maybe it's not 3%, but 1% is still positive. I mean, that's the notion here. Should this particular fund, because it's 60% of the rainy day fund, should it be subject to any market risk at all?
Yeah, I mean, to me, that's a town policy question. That's not really an investment committee question, I don't think.
I agree.
I mean,
Okay.
if the town is dictating that the rainy day fund be subject to zero risk, then we would instruct the advisor, which is Dominic at Brown, to put everything in cash.
Okay.
I think in this market, I suspect Dominic's advice is going to be that's ill-advised in this environment because we anticipate that interest rates are going to go down, which would benefit your existing holdings. So the bonds you're holding today would look more attractive as interest rates drop. So you're probably likely to see increases in a bond fund. Again, you're buying the duration and you have a potential longer term benefit if rates were to drop.
Right.
And simultaneously, you would expect your money market to just track whatever the current interest rates are. So if those rates are dropping, you're essentially buying into dropping rates.
Right.
But if the goal is to ensure no loss at all, I mean, the only thing that will assure you of that is parking it in cash.
Okay. Well, to me, I think that's the question we just need to kick around among the commissioners and see where we come out on that. I mean, I don't disagree with anything you've said in terms of the recommendations here, but it's just a question of dealing with likely versus certainty.
Yeah, and I think the only certainty you're going to get is putting it all in cash.
Right.
I will bring this back to the commissioners when we meet next week as part of my report on this committee. Thank you for helping me think it through.
Sure.
And interest rates on cash don't usually keep in line with inflation, usually less than inflation. So technically you'd be losing.
Any other comments or questions?
Kate, we got somebody who wants to make a comment.
We appear to have someone in the waiting room.
Okay. Do we have any public comments?
Yes. May I go?
Sure, please.
Okay, so David Moskowitz, and I'm a CPA and also a chartered financial analyst. What's being discussed is being misconstrued because, as someone said, there's inflation risk. And what's happening is with Dominic and Brown Advisory, you're marking to market. So if he buys you T-bills at 4%, let's say, and then the interest rate goes up to 5%, technically you're losing money because the value of the bonds have lost money. However, if you hold it to maturity, you're not actually losing money. And the difference is if you put it in a bank, you may not be marking to market. For instance, for many years prior, Fulton Bank was giving the town, I guess, 0.25%. And the town was like, hey, we're making money, but they were actually losing money because of the inflation risk. So, I mean, what was being brought up is a complex subject, and to put it all in cash when you're actually earning interest would be crazy. It wouldn't make financial sense. So, I mean, the best thing to do is have Dominic at this meeting and have a list of questions from the town, because it seems like someone's asking a lot of questions, and send it to Dominic and have him prepare and then have him speak at the town meeting. The town has in the past, just a few years ago, they freaked out with their portfolio and they basically made changes and it cost the town money. So you want to do things measured and cool. And also, the Brown Advisory Report used to be posted monthly, the ROAR output. and quarterly you get the summary. So I believe if you look at the town website, that monthly output should be posted if it's not. But if you ask, as I think Brian alluded to, we're paying around very little compared to what other people might charge. If you ask them to do more, as far as reporting, they may charge you more. So that's another consideration where the town gets the report monthly and they could easily consolidate it on their own end. Thanks.
Thank you. Appreciate the comments. Very helpful. Are there other public comments? Do we have anyone else in the waiting room?
No.
Nope. All right. Any other comments or questions before we move on to the next topic? All right, hearing none, next item on the agenda is to discuss and possibly vote to approve new investment policy guidelines. I'm not aware of any proposals in that regard, but I open it up to the committee.
I'm fine with what it is.
Any other questions or comments on that item on the agenda?
No.
And any public comments? All right, hearing none, then we will move on to the next item. Discuss and possibly vote to recommend to the town council amendments to the Dewey Beach virtual meeting policy. I think this is driven by the challenge for this committee of having a sufficient number of people in person to meet the quorum requirement. We've seemingly never had any problem getting people to show up virtually, but the town policy requires that we have at least 2 people in person at the meetings, which is not always feasible, which is how this meeting got delayed so far, because we couldn't meet the in-person quorum. So I believe the recommendation would be to either eliminate or reduce the in-person requirement, but I open that up to discussion on the committee.
Well, myself, I'm going to be in Florida for 4 months, so I'd miss it. I think I would eliminate it, to be honest.
The only thing I would say, is there a town or state requirement saying you got to have people here at the meeting now?
So Kate can speak to that. There is some state requirements, and then we do have our own requirements for certain types of committees, Board of Adjustment, planning and zoning, things like that. But as a town manager, I think it's tough for everybody to make these meetings to have a quorum here at the anchor location. And the anchor location could be open. If we decide to do that, it would mean Kate and I would probably be here and everybody else would be on Zoom if we decide to do that. Whereas when we were operating under COVID, everybody could be by Zoom. But I think, Kate, you can elaborate a little bit more on the requirements.
Yeah, we're required by the state to have an anchor location. As far as quorums in person and whatnot, that's all according to our virtual meeting policy as a town. As far as who needs to be in the room and whatnot.
And Kate, does the investment committee fall under the more restrictive, or could we petition council to be less restrictive?
You could petition council. I like to say that the way they set it up was basically a tiered approach. You guys are in the lowest tier, which means 2 members have to be present at the anchor location. The next one is for Planning and Zoning Commission or the Audit Committee. Theirs is a little more strict. And then top tier is Town Council and Board of Adjustment. Theirs is the most strict. So, yeah, you guys are bottom tier. Sorry to put it that way, but
I really sometimes appreciate being bottom tier.
No offense taken.
Could I make a comment?
Please.
I think there's a question of whether or not you have to have at least 1 member present. Kate's certainly right. The FOIA requirements say that you have to have an anchor location at which people can attend. But if you look at the definition of the anchor location, and I don't have that in front of me at the moment, unfortunately, that says to me that you actually have to have at least 1 member of the committee present at the anchor location. I think that's the state requirement, but I think we should get clarification on that before we make any changes. I mean, I think this committee and some of the other committees certainly could work just as well in a full virtual meeting that if it meets the state requirements, I think that would be just fine. That's my opinion, at least. I think we've sort of gradually, with COVID and everything and the proliferation of virtual meetings, I think I think our thinking has changed about whether the value of in-person, being present in person. But again, I think we need to get a clarification on that, on the state requirements. I may be reading it differently than other people, but I think the definition of anchor location would indicate that you need at least one member present.
And Gary, you're saying that's something we should check with Fred about, or have Kate look more closely? What do you?
Yeah, maybe Kate could get some better definition on that. Again, you have to look at the definition of anchor location.
So can we ask now maybe that we can meet in the minimum way? Whether it's one person, whether it's two, or nobody, can we ask now? We'd like to be the lowest level, or the highest
The
level.
new level.
I mean, I think that makes sense to ask and get clarification. I mean, let me put it back to the committee. I mean, is there anybody who wants to maintain the in-person requirement? I mean, it currently stands at 2, which we've easily met today, but has obviously been a thorn in our side in quarters past.
Well, to me, it's just, what will the state allow us to do? That's really what guides us. If it's 1, I'm good.
Yeah, me too. And if it's 0, I'm good
That's
too.
even better. Don't care.
So I think then the question is to put it back to the town to get guidance on what the minimum requirements actually are, and then we would follow with a recommendation to the town to amend the virtual meeting policy to satisfy whatever the minimum requirement is.
We'll do that homework on it, and we'll be prepared to bring that up at one of the commissioners' meetings.
Okay. I mean, at least for my part, I think the recommendation would be to go with whatever the minimum is. We can obviously always attend in person, but if the minimum is 0, we might as well set it at 0. And, I think there's always benefit to meeting in person, but at least we would have that safety net that we don't run into cancellations of meetings.
Do we need to make a motion of any kind, or are we good?
We will, I'll bring this up with council and we'll go forward. Brian, another meeting is going to be starting shortly and people are beginning to arrive for that meeting. I realize you probably can't tell that from your camera angle. I just wanted to fill you in on that, but Bill's also.
So can I ask something, Brian? So Kate, would it be better that, I don't want to lead the committee, but better that they do a motion to have the question asked on how many people they need to have at the anchor location, to actually have a formal vote on that, so then it goes back to the commissioners, or are we good with just saying that the town will bring it up with the commissioners?
To me, this could go either way. I did tell Elizabeth beforehand that they didn't necessarily need a vote among
Okay.
the committee. If she did want to request to the mayor that this agenda item be put on there, she could do that on her own, just as a commissioner.
Okay.
I did recommend that we have this item on the agenda for the next meeting.
You
It
did
will
okay.
be.
I sent an email to the mayor, town manager.
It will be regardless. It is slated for next week's meeting.
Beautiful. Look at how that works, gentlemen and lady. Yes.
Seamless. All right, any other public comments on this topic?
No.
Okay, very good. Next item, committee member comments. Anything else that we've missed that needs to be discussed?
No.
Hearing nothing, then I think we're ready to adjourn. It is 5:44 p.m. and do we have a motion to adjourn the meeting?
Motion.
Have a motion. Do we have a second? All in favor?
Aye.
Aye. Passes unanimously. The meeting is adjourned at 5:44 PM. Appreciate everybody's time and attention today. Thank you.
Thank